Hey guys, welcome in this video. I hope that all of you are doing right. So in this video, I'm going to explain you guys the last trade that I took on the market, which already closed in a pretty nice profit. So this was a relatively short-term trade in comparison to what I normally take. So I took the trade last week and I already closed the trade at the beginning of this week. And it was, as I said, a pretty good trade. So I'm going to explain you guys literally everything that you need to know about this trade, the fundamental analysis, the technical analysis, where did I get in the trade, why did I close the trade, and stuff like that. All right, so I'm literally going to give you guys a lot of value in this video. I'm also going to try to keep it as simple as possible so that all of you guys can understand clearly what I'm explaining. And my goal, as always, is to make my free content better than other people paid stuff so that you guys understand the value that we have inside of our coaching program and that we one day do business with each other. All right, so just before that we start, as always guys, don't forget to leave a like under the video. I would really appreciate it. It helps me grow the channel, and make sure as well that you're subscribed if it's not already done. And with that being said, let's get right into it. All right, so the trade that I took was on gold, and as I said, it was a pretty short-term trade because I actually took a short position around this level right here, and I rode the market all the way down until this recent level right there. And so the trade, as I said, lasted a couple of days. It was a pretty short-term trade and it was a pretty good one overall, nothing too complicated to understand, I think. And this is what I will explain you guys right now. So first of all, let's begin with the fundamental analysis. Okay, now as you guys can see, right before this little move to the downside, we had a big push to the upside right here on gold, and this movement is the same as the trade that I explained in the last video, which was the down movement that we had on USD CAD, which actually means that the dollar, which is what we have right here, so the dollar index actually went down. Okay, so what is important first of all to understand is that when you trade gold, okay, we can look at it on TradingView directly. It's written XAU USD. Okay, so it's really gold that is compared to the US dollar. So obviously the value of the currency is very important to determine the value of gold. Okay, and so essentially the fundamental analysis, as I said, for the up move that we had here on gold is the same fundamental analysis than the down move that we had right here on the dollar, which I already explained in a lot of details in the last video, which was the trade breakdown, as I said, on USD CAD. So I'm not going to re-explain everything in details, right? You guys already have access to this. Just go watch the other video if you haven't done it already. But essentially, right, just to put you in context again, we had a big down move on the dollar for one simple reason. Okay, so a couple of weeks ago, we had the release of the CPI data in the US, which actually is the inflation numbers. And for the first time, we had a really strong and meaningful sign that inflation was starting to come back down, okay? And so because of that, if inflation comes back down, it means that the Fed will also slow down with raising interest rates. And so what this could lead the market to do is simply for the dollar to go back down, okay? So it's going to reverse the trend that we had right here, and it will be, for example, positive for the stock market, okay? And so that's the reason why we had a pretty big move, as you guys can see, on the dollar. Now, something that is very, very important to understand right here, and I also touched on that in the last video, but essentially, right, we had, for the time being, just one report that inflation was starting to come back down, okay? And what that means is that yes, inflation is starting to slow down. Yes, at some point the Fed is likely to slow down with interest rates. But again, we have one report of this, one confirmation, okay? Is it enough to say that inflation is completely over, that the Fed is going to completely stop raising interest rates, that they're going to cut rates, and that the dollar is going to go a massive downtrend, right? Is it enough to say all of this? The answer is obviously no, okay? So we cannot have a general thesis like that is so large with just one number of one inflation report, okay? And so what does that mean, right? And you guys will see where I'm going with this, right? What does that really mean? Well, it simply means that as this down move was going on the dollar, I already had this idea in mind. And so if we don't have a medium to long-term confirmation that inflation is going back down, that means that people will likely get out of this trade on a short-term horizon, okay? Because why would you keep a short on the dollar for the long term when we don't have any long-term confirmation. It doesn't make any sense, right? So as a professional trader, right, and that was really what we needed to keep in mind, people are likely going to get out of this trade relatively quickly because on the medium to long term, we don't really know how this whole situation will develop, right? No one knows how this will move, not me, not the Fed, not you, right? Nobody, right? There's just not enough data right now to actually have a long-term idea with this, right? And so the thesis was, okay, if people are going with a short-term trade right here, where are they likely to take profit? Where are they likely to get out of the trade, right? And so in terms of the dollar index right here, as you guys can see, the zone is pretty damn simple, okay? We have a lot of highs and lows right here, and we also have the 200 moving average, okay? So if there is one level that had to be watched, it was, of course, this one right here. We have the same level on Euro USD. We have a similar level as well on USD CAD, which is where I got out of the trade. And we also have the big zone on gold, okay? And so we had the same big level all across the board. And so to me, it was pretty probable that people would get out of the trade arriving at this level here, and that if everyone gets out of this trade, it creates by nature a pullback on the market. So it creates a move in the opposite direction, which is something that could be traded, and that is exactly what I did, okay? So we had the down move on the dollar. We had a small change in terms of fundamentals, but as I said, this does not confirm anything for the long term. And so what does that mean? That means that when we get to the big level, right, people are likely going to get out of the trade to take profit. And that's exactly what I did as well on the trade with USD CAD. And so people taking profit there means that gold is actually going to make the pullback, okay? And so as you guys can see, right, this was the zone that I was looking at on gold. And so now let's talk a bit about the technical analysis, right? So here I really gave you guys the explanation for fundamentals and the thinking process. So this trade is really based on the idea that we had a big move recently. This move is a short to medium term move. It's not a long-term confirmation. So people are likely to get out of the trade at the profit taking zone, which is this one right here. Okay. So this was the fundamental and the context of this trade, if that makes sense, right? Now let's look at the technical. So as I said, we had this zone right here on gold. So how could we have found this zone? Well, pretty simple, okay? We had this big horizontal level, as you guys can see, which was, already in play for multiple times before. And we had this previous high right there within the downtrend. And so this gives us a zone that I have highlighted right here in white, okay? So this was the zone that I was looking at. We also had a fib level, which was the 38.2. So if we fib this whole down move, we can see that we had a pullback all the way to the 38.2 right here. And we also had the 200 daily moving average and this previous trend line that was respected, right? So as you guys can see, this was a pretty big overall area. And so what is really important to understand, right, is that as the price gets to this level, right, well, as you guys can see, it's a pretty large zone, okay? We have 1785 all the way to 1807, right? So it's a pretty large zone, right? Almost like 30 bucks, okay? And so what that means is that we need to ask ourselves the question, where are people going to take profit, right? Are they going to take profit at the beginning of the zone, in the middle of the zone, or at the end of the zone, right? And most of the time, I would say that people take profit at the beginning of the zone. And again, it makes a lot of sense, right? Just think about it, right? Let's say that you bought gold in the last couple of weeks, right? Let's say that you bought gold right here, you bought it right here, or you bought it right here. And let's say that you are a big trader in a hedge fund or institution or something like that, right? And so let's say that as the move is going up, let's say that you have $500,000 profit at this level, right? I'm just making this up as an example, right? So if you have $500,000, right, of profit at this level that is still floating on the market, right? What are you going to do when it reaches a big zone? Are you going to try to squeeze in a bit more and be greedy with the trade? Or are we going to say, you know what? We already have a big profit on the trade. Let's just close it right there. Let's just not take any useless risk and secure what we have. Well, of course, you're going to do this, right? Especially if you trade with a pretty big account, as I said. And so the likelihood of people taking profit here instead of at the end of the zone was actually pretty high. And so from this very specific level right here, there was now a bigger probability of the market making a down move than the market breaking above this zone, okay? And so from there, this is when when I started to look for a selling opportunity to actually bet on the downside and make money on the way down. Okay, so essentially that was the thinking process, and that is how I identified this zone right here. Now, if we go on the lower time frame, and I will show you guys how I structure the trade and all of these things. Okay. So first of all, let's do a little replay right here and come back all the way there when we first hit this zone, okay? So as you guys can see, we had a pretty big uptrend that we had, for the past multiple days. And so we could have identified this uptrend with a trend line right here. So as you guys can see, it was respected there, there, and there as well. We also have the 50 moving average, which was respected very, very nicely. So the green line on the chart, right? Even right here and right here. We could also clone the trend line and have it just like that. Okay, so we had essentially this uptrend going on, as you guys can see, and so the idea was to simply wait for a break of this trend, which would confirm a reversal and the down move that I was looking for, right? It's very important to understand that within my trading, I'm not going to try to sell at a big level or to buy at a big level, right? I don't get in the trade when it reaches a level. I need to wait for a confirmation and for a change of direction to really confirm me that the market is actually starting to go in the other direction and that it's not just doing up and down around the level before another up move, for example, right? Oh, so I was not looking to, get in the trade around here. I was really waiting for a breakout, okay? And so essentially, as I said, I was watching this trend line right here. I was watching the 50 moving average, and I was also watching this series of higher points on the chart, as you guys can see. Okay, so I was waiting for a break of all of this, and that would be when I would get in the trade. So let's play the market and see actually what happened from there, right? So now the market goes up and down a little bit, as you guys can see. We come back on the 50 moving average, and as you guys can see, we respect the moving average again, and we make a new higher point. So this was now the level that I was looking at for the market to break. Okay, so we can identify this level if we want with a horizontal line like this. Okay, and so as you guys can see, we were still getting squeezed, okay, because we were getting smaller right here, and we were also playing with this level. So the market was kind of getting smaller and smaller, and so at some point, well, we knew that there was a high probability of a break either to the upside or to the downside, but I was only looking for the downside opportunity. So after that, market comes back down, we start to do some up and down, we start to break a bit here, as you guys can see, right? So we start to break a bit the trend line, we start to break a bit the 50 moving average, but this was not enough. I really needed for at least a higher point within the trend line, which means this level right here, to be broken. Okay, so we wait a bit, we wait a bit, we wait a bit, and boom, there we go. Okay, with this candle right here, it was at the beginning of the Tokyo session at night. We had a pretty strong breakout, as you guys can see, which was confirming the break of the trend line, the break of the moving average, the break of this level right here, and the potential change in direction. So when I saw this breakout, what did I do? I simply got in the trade. Okay, so I got in the trade right there. I had a stop loss above this level right here, which was the high of the week. And of course, it's a pretty simple and I would say logical stop loss in the sense that if we are really getting the breakout and if we are really changing direction, of course, the market should not come back all the way above the previous high. It doesn't really make sense, right? So it's really the ideal level for the stop loss right here. And then in terms of my target, so in terms of the level that I was looking to take profit, it's pretty simple. It is simply based on a daily zone once again. Okay, so most of the time the market will move from one big level to another big level, right? So if we reject this daily level right here, where is the market likely going to go? Well, it's simply at the next daily level, which is right here. As you guys can see, we have a lot of lows and a lot of highs right here. Okay, so I put two horizontal line, which give me this kind of zone right there. Okay. And again, the thought process is the same, right? If we have a big zone on the chart, where are people likely going to take profit? It will be at the beginning of the zone. And so that means that my target was precisely at this level here, so 1735. Okay, so this was the level that I was looking at for gold. Now I already see some of you guys asking the question, right? Why did I not consider, this level right here? Because as we can see, we have a lot of highs and lows right there as well. Well, the answer is exactly what I just told you guys. So it's all about the daily levels, right? And so if we go on the daily chart, we are not able really to see this level here. Okay, so this level here does not really exist on the daily chart. It's really this one right there. Now it doesn't mean that it's not going to be important and that it's not going to have an impact. It just means that I'm not going to close the trade at this specific level, but of course it could definitely impact the market and maybe be a level where we get a correction, for example. Okay, so essentially I got in the trade right there, and so let's play it forward and see what happened. Okay, so as you guys can see, the market starts to go down. It goes pretty well, then we start to make a little correction. We break here, we go all the way to this level there, and as I said, this is where the market started to make a bigger correction. So nothing surprising, nothing to worry about, right? I mean, it's completely fine for the market to make a correction, right? I was not really surprised by that. And as we can see right here, right, we have a pretty big overall zone of a lot of highs and lows. So the market could definitely go back within the zone, make a pullback, and then break to the downside. So I was really not afraid or, you know, stressed out or anything like that, right, with this pullback. So we make this correction, and then after that, as you guys can see, so this was Friday. So on Friday, right, we start to actually break out under this massive level, and at that point I was like, wow, it actually looks, you know, pretty good for my trade. And so I was looking to see if the market would essentially just follow up after the breakout and keep going down. Okay, at that point, since we had the breakout, we could also have this trend line right here, clone it and have it like this. Okay, so just to give us this kind of, you know, down move right here. Okay, and so as you guys can see, the market does this little up and down. We go down a bit more to finish the week, and then on Monday, well, on Sunday night, I mean, right, the market opens and keep going down. During the night we do some up and down, and then Monday morning, as you guys can see, the market keeps going down and we actually hit the profit taking level right here. So this is where I got out of the trade. So as you guys can see, pretty good trade overall. And then after that, the market actually went through a reversal. So now the market is trading a bit higher. So it was a pretty good decision overall to get out of the trade at this level here. So yeah, I mean, that's about it. That's the trade. So as you guys can see, it's a pretty different trade than, you know, the last one or the trades that I normally take, because sometimes the trades that I take are medium to long term, but sometimes I also take trades that are a bit more short term. And the reason why is very simple. As a trader, you just need to be able to adapt to the market and take whatever opportunities present themselves to you, right? So it's always about being able to adjust to whatever the market gives you and being, you know, a bit flexible with the markets that you trade and with the time frames that you trade, right? So that you can catch the best of the best opportunities and simply be able to take high probability and quality trade setups. All right, so I hope you guys enjoyed this video. If you have any questions, right, feel free to drop them in the comment below. I will be happy to answer you. If you enjoyed the video again, right, you can leave it a like, you can share it around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.